Billionaires don't break tax laws. They understand them better than everyone else. How do billionaires legally avoid taxes? Most people think billionaires pay less tax because of loopholes or corruption. The truth is more uncomfortable. The tax system is designed to tax income, not ownership, and billionaires structure their wealth to avoid taxable income almost entirely. They don't hide money. They rearrange it. 10 legal ways billionaires minimize taxes. 1. They don't burn salaries. Taxes hit hardest on salaries and wages. Billionaires rarely take salaries because salary is fully taxable. Instead, their wealth sits in shares, businesses, and assets that are not taxed unless sold. No sale means no income, and no income means no income tax. 2. They borrow against assets instead of selling them. When billionaires need cash, they don't sell shares. They take loans using stocks or businesses as collateral. Loans are not income, so they are not taxable. As asset values rise over time, they repay loans using new loans, avoiding taxes indefinitely. 3. Capital gains are taxed lower than income. When assets are sold, they are taxed as capital gains, not salary. Capital gains tax rates are usually far lower than income tax rates. This allows billionaires to convert massive wealth growth into lightly taxed income. 4. They use trusts to shift and delay taxes. Trusts allow wealth to be moved across generations while minimizing estate and inheritance taxes. Income inside certain trusts can be deferred, split, or taxed at lower rates. This legally delays or reduces tax liability for decades. 5. They use business expenses and depreciation. Billionaires own businesses, real estate, aircraft, and infrastructure. These assets depreciate on paper every year, creating accounting losses. These losses can legally offset taxable income even when real cash flow remains strong. 6. They earn through equity, not cash. Instead of taking cash compensation, many billionaires receive stock options or equity. These are taxed only when exercised or sold. Until then, massive value growth remains untaxed. 7. They use offshore structures legally. Offshore does not automatically mean illegal. Many countries offer lower taxes on intellectual property, dividends, or holding companies. Billionaires structure global operations to legally earn profits in low-tax jurisdictions. 8. They time income strategically. Billionaires control when income is realized. They sell assets in low-tax years, offset gains with losses, or wait for favorable tax laws. Timing alone can save billions without breaking any rule. 9. They donate through foundations. Charitable foundations allow billionaires to donate assets instead of cash. This creates large tax deductions while allowing them to retain influence over how the money is used. It is legal, structured giving with tax efficiency. 10. They pay for elite tax strategy. Billionaires employ teams of tax lawyers, accountants, and policy experts. These professionals don't find loopholes. They design structures that operate exactly within the law while minimizing exposure. Complexity itself becomes protection. Final truth. Billionaires don't avoid taxes by cheating. They avoid taxes by avoiding taxable income. The system rewards ownership, leverage, and patience. It punishes wages, cash flow, and simplicity. That's why the rich play a different tax game.